In fact, let's bring in Amit Shah as well, technical research analyst at Indiabulls Ventures. Amit, good afternoon to you. It is a weak market, but that said, like Piyush was pointing out, it's a tight range. We've mostly been trading between that 10,100 to 10,150 range. Where do you see expiry coming in, and what's the range you're looking at for the next series?
Yeah, hi Nitya. So definitely markets are quite weak, but you have to see it in on an overall basis that we have corrected quite sharply from 11,700. Now we are towards more towards the 10,000. Markets are not seeing a great amount of buying which are propelling the markets up, but at the same time, on a silver lining, what I would say is the selling momentum is slowing down, and the acceleration which happened on the downside for the markets along with the NBFCs. Now on a selective basis we are seeing some buying interest coming back to some of the NBFCs. I think we are quite closer probably to the bottom. Now it may be a difficult thing to call out exact levels, but maybe somewhere around 9950, 10,000. I think we are very closer to this phase of the downside, and I'm quite confident we'll see good times ahead. At least a decent bounce back which takes us towards 10,700, 10,800 zone. My sense is the selling is ebbing here in a lot of stocks, and especially now NBFCs are also showing signs of fatigue on the downside, some of the pockets there. So I think probably the markets would even bottom out along with the short-term bottom formation in the NBFC space itself.
Okay, short-term bottom may be in place. In fact, you can expect a recovery from here. That doesn't seem to be playing out. Dish TV, Amit, that's the one. Look at the cut on that. It's over 11% gone now on a Dish TV, 12.5% as we speak on that counter. I know there's an earnings reaction playing out, but what would the technical call be over here?
Sure. Yeah, so Dish TV has been quite a weak counter for some time now. Of course, since it's anyway weak, and there are triggers for it to go down, so it's taking further beating on the downside. But again a move. See, somewhere around 38, 39 is some sort of a support. But the stock is quite weak. Even if it maybe halts there, I don't see any major bounce back coming in for the stock. So it is definitely a weak counter.
All right, it's 12.5% cut coming in on a Dish TV. Of course, the profit figure is at 19.7 crores versus the loss last time. A few more comments coming in. In fact, in terms of quarterly ARPU, it's coming at 207 rupees. That is down sequentially. Also, they pointed out the lack of heavy-duty sporting events has impacted their subscription revenues growth in the quarter, and the capex synergies, set-top box cost negotiations have led to 110 crore savings. So some good news, but clearly hasn't been able to help them as far as the quarter is concerned. It's a deep cut coming in there on a Dish TV. We'll take a quick break, come back, talk about a few more of these earnings reactions that are playing out at the moment. It is a weak market as we speak. The Nifty at that 10,150 mark. Stay tuned, we'll be right back.
Welcome back. You're tuned to the trading day. Just pull up a Dish TV once again. It's a 15% cut now coming in on the counter. So extreme weakness on a Dish TV ever since its numbers came out about 10 minutes ago. That stock is falling off the cliff. 15.5% at the moment as we speak. Putting the focus away from Dish TV though, IL&FS on the radar. There is a board meeting underway, and they are looking at various options to monetize some of their road projects as well. Ashutosh Kumar is joining us with the exclusive details on this one. Ashutosh.
Well, yes, a very important board meeting of IL&FS is currently underway, and there are two specific agendas that are to be discussed in the board meeting today and is likely to continue till tomorrow. The first is monetization of the road projects of IL&FS, which are up and running and on which the toll revenue is already coming. Another very important agenda that will be taken up by the IL&FS board between today and tomorrow is going to be merging some of the subsidiaries to enhance valuations. Now, coming to the road asset monetization of IL&FS, what we have learned exclusively from our sources is that essentially the projects have been divided into two buckets, so to say, and the first bucket, in which there are at least 10 projects on which toll revenue is already coming. These are the projects that are up and running. The board is trying to monetize them, find takers for these 10 projects. In case of the another bucket, in which another 9 projects are there, but all those projects are at various levels of arbitration, and the board is trying to address the arbitration issue. In fact, the government is also hand-holding, in fact, to sort out the arbitration and do it on a fast-track basis, so that these projects also could be put on the sale block. So this essentially is the strategy that is going to be discussed between today and tomorrow. Another issue that I told is that of proposal related to merging some of the subsidiaries to enhance valuation. So these are two very important agendas that have to be taken by the IL&FS board between today and tomorrow. Another very important aspect of the IL&FS story is that the PMO conducted a review with the Ministry of Corporate Affairs on whatever had been happening in the last 1 month on this front. So indeed, two very important events to watch out between Delhi, in Delhi and Mumbai, and we'll indeed have a close eye and get back to you on this.
Absolutely, Ashutosh. Thanks very much for bringing us those exclusive details. A very, very crucial board meet. In fact, every board meet, every major decision made by the newly constituted board of IL&FS will be very important going ahead from here, looking to monetize their road projects, and that, of course, is on war footing, like the board indicated earlier. They will be looking to shore up some amount of liquidity from the assets that exist within the group company at the moment. But let's put the focus then back on the markets. It's extremely weak at the moment. Let's bring in Amit Gupta as well, head of derivatives at ICICI Securities. Amit, good afternoon to you. Let's talk about the kind of commentary that you're seeing around rollovers, because we're seeing strong rollovers coming for the Nifty, not so much for the Bank Nifty, and that's quite a contrast to the previous series. What really is the sense that you're getting at this point?
See, Nifty, if you see this particular fall, I mean, we had seen a very significant liquidation of positions. So that is why the open interest was almost near the 1-year lows. So from there, the positions have started, transferring into November, and November is starting with a little higher open interest now, what was seen in this October expiry. So the scenario is there may be some interest possibly coming back in the market near these levels, and it is possible that around 10,200, 100, some base formation is happening. If you look at what happened, and that is definitely positive to our markets, that S&P in the last 2 or 3 weeks, it has seen almost 7 to 8% of correction, and we have somehow absorbed that kind of selling pressure from the developed markets. So we were at 10,200 on 8th of October, and now it's almost 20 sessions we have spent, and we are still closer to that, and by that time S&P has come down by 7 to 8%. So I think the factor that is helping is the crude fall, and which has come down by almost $10 per barrel, and along with this the rupee appreciation. So that is why I think these factors are helping us, and it is possible that some mid-cap short covering you can see in the month of November if large caps don't see that kind of a sharp up move. So that means the market possibly can consolidate here, and there may be, as per the results announcement, there may be some strength coming back into the mid-caps.
All right. In fact, Amit, based on that, tell us which stocks look interesting to you for the month of November based on the rollover data.
See, for example, the stocks like Kajaria Ceramics only, which was continuously falling, right? And just because the crude has come down, there is a possibility of the gas also falling, the gas prices falling, which is the input to Kajaria Ceramics, and which was a big problem for the stock, that input prices are moving up. So in that case, you can see some good short covering pattern coming up, and today move also is a justification of that only. And I think this stock can move up by another 15-20% from such a low base. In addition to this, I think certain auto ancillary stocks, because auto stocks have also come down very significantly. The stock like Exide Industries, which has come down to almost 250, which is a base level of the previous consolidation. So my sense is from here, some buying interest can come into these stocks.
All right, Kajaria Ceramics and an Exide Industries. Amit, you spoke about the entire crude theme. Just wanted to get a sense from you. Anything interesting that you're spotting as far as these paint stocks go, or the oil and gas stocks like ONGC, GAIL, that seem to be on the move today?
So paints, there may be some support. Now we have to see how Asian Paints really pan out, because there was in the last leg there was some short formation in the stock. So we are just still on the sidelines as per the paints are concerned, because in this results, if you look at particularly Kansai Nerolac, there was almost 400 bips of margin decline. The market was expecting near 200 bips of decline. So we need to wait and watch even after the results how the stocks are panning out. I think one good point in Asian Paints is, if you look at from 2016 till now, there was a period in 2017 where it spent almost 7 to 8 months near 1100 levels. And this particular fall has been arrested near 1115. There was a panic selling towards 1115, and then it has reverted from there. So at least in the first fall, it has respected those levels, and there has been almost second highest life high volumes we have seen near those levels of 1115, 1150. So I think this shows that the stock has respected this, and that is where you can see some more sessions. It is pending above these levels, and eventually then if some cash buying support starts happening, then I think that these stocks can start seeing some move with the market.
Before we let you go, Amit, two stocks, Yes Bank and Maruti, a very disastrous October series for both of them. What's the setup for November?
See, particularly Yes Bank, I think certain clients' positions were very heavy, and because the stock beyond a point could not move up, so it has simply fallen prey to this long liquidation. On NSE, we have already started seeing the client-wise positions where the positions were a little heavy. So as today we have the expiry, so we have clearly seen the closure of some liquidation of those positions, and that is where it is in pressure. We are not expecting any major upside in the stock in the near future. It will spend more time here. In fact, you're talking about Maruti. So Maruti, if you look at the overall trend, was something which from the levels of around 8,000 has seen very high short build-up. So that is why the last 1,000 points of move has come because of this. And still we have not seen any major short covering. This particular rollover has seen some smooth rollover of these positions. So we are still waiting. Though the volumes which have started coming from today, they are really increasing around 6750. But before taking the buying positions in this, I will wait, because we need to see the closure of at least 5-6% of open interest of these rolled short positions into November series.
All right, looking a little dicey at the moment. Thanks very much, Amit. We'll leave it at that. Appreciate your perspective this expiry day. Amit Shah, coming back to you then. Just let's talk about some of the trading ideas that you have at the moment, if any. What's on your list?
Sure. Yeah, so in a weak market like this, probably some of the few calls on the long side that I like is TVS Motors. It's looking good on the charts. My sense is it's headed towards, not a big gain in such markets, but of course a tradable move towards 555, 560 zone. So that is one idea that's looking good on the upside. One can buy that with a stop of 516. So that is one which is looking good. The another one is Shriram Transport Finance. One second. Yeah, Shriram Transport Finance, that's showing some promise, so that can be bought with a stop of 1048, and the stock can head towards 1140, 1160 zone. So that's another idea on the upside which is looking good.
All right, a couple of trading ideas there from Amit. Let's keep it with earnings then. More numbers coming in. Bharat Financial, strong Q2 for them. Profit, the top line up is 25% nearly. Profit is up nearly 64%. The loan portfolio has also grown by about 46%. A healthy addition on the customer front too. Ashish Damani, the CFO of Bharat Financial, is with us. A good quarter for you. Your profits have more than doubled in this one. Could you talk about it and what's led to this kind of growth?
Basically, if you look at our portfolio growth, that's the driving factor here. We have seen on a year-on-year basis 46% growth in portfolio. Even on a quarter-on-quarter basis, it's 12%. So strong growth in portfolio is the driving factor, and which is led by the strong customer acquisition that we do. So we have done 10.5 lakh customers were acquired during the quarter, which displays that the pipeline has been strong.
All right. Good afternoon, Ashish. Your loan portfolio is largely, of course, driven by customer acquisition. How is that looking at the moment? What is the strategy here? Are you diving deep into the existing geographies you have, or have you been looking to expand into new regions?
So it is primarily on account of getting deeper into the geographies where we are present by rolling out more branches in the same existing states, or let's say districts where we have seen good response from the customers. That has been the primary strategy. We have just added a few branches in 4 new states, but those are like total of 8 branches in all. So that's like very early days. We're just testing waters there.
One of the biggest concerns, of course, with the entire NBFC and, of course, the financial space, MFI is included, is the liquidity scare. What's your condition at the moment? What is your borrowing mix currently? Is there a problem or a crunch that you're facing, and what's the cost of funds for you right now?
So here there are a few points that I would like to make. One is, we are not like any other NBFC. We are into microfinance. Our loans are primarily for 50 weeks and maximum of 2 years. Unlike other NBFCs where loans can be anywhere between 4 to 5 years or more. When we borrow primarily through the banks, and these are term lending, or let's say securitization or assignment transactions that we do banks on the other side. And these are anywhere with a maturity of 10, 12 months to 3 years. And thus, if you see, our ALM has been having a positive mismatch throughout. So this liquidity challenge, which is there otherwise in the industry today, doesn't affect us as severe as Yes, there will be a challenge on the pricing side, but that's fine, and that should be temporary. We are well below compared to the industry in terms of our pricing, much finer. So we may see some 10 basis points increase. That should be fine with us.
All right, 10 basis points is the kind of increase we're looking at in terms of cost of funds. What is the update, Ashish, in terms of the merger with IndusInd Bank? Any timeline that you can share with us?
Yeah, we are in the last leg. We have applied with NCLT, and we should hear from them anytime soon. And we believe that the meeting, the shareholders meeting, should be called in next couple of months.
All right, so tie it in all for us. What can we expect for you from you for the rest of FY19? What's the outlook?
So we have given the guidance, and we are very confident that we will overachieve there. Should be very comfortable for us. We don't see any aspect of business, whether on the supply side or on the demand side, where anything is likely to go wrong. So we are very confident of overachieving our guidance.
All right, Ashish, thanks very much for joining in. Appreciate your time. That's the view coming in there from Bharat Financial, trading under pressure at the moment. In fact, keeping it with the financials, then pull up an L&T Finance. We're seeing deep cuts in this counter. Has been trading in the red consistently ever since its second quarter numbers came out. In fact, we're trading near about days low at the moment. It's down about 8% as we speak. And this is in spite of a strong set of second quarter numbers the company put out. Profits jumped about 66%. NII also looked quite strong, but several concerns around the exposure to super tech and subsidiary companies of IL&FS weighing on that counter. We did speak to the management of L&T Finance. Let's bring you some comments from there. Let's also talk about Lakshmi Vilas Bank. That's the other counter that's trading under pressure. We caught up with the management of that bank as well. Listen to both those comments and then we'll come back and discuss these stocks further.
The positive gap is of plus 18,000 crores or plus 58% in the 1 year scenario. We have kept 6,200 crores approximately as liquid cash plus FDs plus other liquid instruments just as a safety measure. In addition to that, we have got around 4,000 crores of undrawn bank lines and a 2,000 crore backup line from our parent, which are all undrawn. We are confident that all these projects have positive equity value and there is no question of any possibility of any losses, any haircuts in these projects.
The main challenge for us, of course, is capital at this moment. So since we are strapped for capital, we obviously have to work on rebalancing of the book rather than growing the book. In the coming 2 quarters, we should be recovering anywhere between 500 to 700 crores once the capital is in, and which we expect to see within this financial year. The bank will in fact come back on the growth path, and our estimate at the present moment is going forward, you should see a CAGR of about anywhere between 20 and 25% for the next 3 or 4 years.
Welcome back. You're watching the trading day. It's a 100-point cut coming in on the Nifty, down 1% as we speak. 10,120 is where we are trading at the moment. The Bank Nifty too has given into some more selling pressure, so we're down over 1% at the moment. Only Kotak Mahindra Bank holding out in positive territory. Amit, let's talk about some of these banking names. Yes Bank, of course, it's seen quite a volatile move today. It was running up in the morning. We saw, a deep cut, then we saw a recovery. Once again, we're down about 3% ahead of numbers. What do you make of this one, and where does it stack up if you compare it to any of these other private banks? ICICI Bank, another one, we're awaiting the big event in terms of its earnings coming out after market hours tomorrow. How does that look on the charts, or anything else that you're spotting as far as private banks go?
Sure. Yeah, so, Yes Bank definitely has broken big time and is of course very fragile. I think recoveries would continue to have sustained pressure as it even moves up. So I think after the around lows of 165, it did make a quite smart move towards 268. But the trend continues to remain weak, and overall the recoveries will continue to face pressure on the upside. Broadly, I see Yes Bank continue to trade in a range and possibly even break down if it gets further triggers on its side. So at best, I see Yes Bank trading in a range and not really getting into that bullish zone. I think the recent top of 268 what we have seen will take a long time to those prices to come back probably. So yeah, I think Yes Bank will continue to languish and drift lower basically.
In fact, let's bring in Saurabh Jain as well of SMC Global Securities. Good afternoon to you, Saurabh. What's the expectation from Yes Bank? The stock has given up all its gains. In fact, we're down about 3% ahead of numbers. Are you expecting a disappointing set this time?
I think it is more of how the new management will come in. I think there are those are the more concerns which are hovering on the stock. Till then, I think there will be no respite. I guess there will be no respite in the stock. Only how the new management will come and who will take over the Rana Kapoor chair is the main thing which is street watching out for.
Amit, let's talk about some of these financials. We were playing out comments of L&T Financial Holdings management just before the break. They've been trying to allay fears in terms of, the exposure to the real estate space, but it doesn't seem to have done much for the stock. We're down 9%. It's the top mid-cap gainer, top mid-cap loser as we speak. What's going on with this one? Which are the key levels that you're tracking at the moment?
Yeah, sure. See, around the levels of 98 to 102 is sort of a support on the downside. Now, it's anybody's guess whether we get there or not. See, broadly, I think as we all know, NBFCs have seen the worst, the maximum pain in this index down move, But, probably there are signs that, a lot of stocks are reaching towards its very, very long-term chart supports. Even the worst names, probably one of the biggest, guy that fell, DHFL, is now towards its crucial zone of 170, 175 kind of a zone. I'm talking about the levels on the long-term charts. Chances are that, while everyone is bearish after such significant down move, there may be some decent value buying coming back to the sector. We are already seeing that happening in few pockets like Bajaj Finance, Mahindra and Mahindra Finance. Selectively, even Canfin Home was showing signs of strength. Selectively, things are settling a little bit, settling down in this area, and my sense is with the broader market as well, this space will see the sharpest bounce back and will surprise people on the upside. I see some names even giving from their lows, giving returns of about 30-35% kind of a returns once market settles down. So I don't think now there's any point in talking about major further downsides. These guys are towards their settling down phases.
All right, that's on some of the NBFCs. Bajaj Finance, of course, continue to look good. Let's pull up our Interglobe Aviation as well, because that stock is doing well. Remember, we expected a bit of a negative start this morning, but the stock actually opened positive and has only grown in strength. It's a 7% surge coming in. Remember, they posted their first ever loss since listing, and it was a big loss, over 650 crores. Fuel costs have gone up significantly. Rupee depreciation also hurting, sharp contraction in margins. The management in their conference call did mention about rising capacities. They are also getting deliveries from Airbus for new A320 neos, and that is definitely 321 neos in fact, and that is definitely going to add to their capacity, and they expect a significant increase in their utilization levels as well. Having said that, of course, the fuel cost overhang was still there, but Interglobe Aviation, what's the view here, Amit? Aviation heavily beaten down already. It could just be a short covering rally, it could just be expiry adjustment, but do you see something more in the charts? Can this uptick or can this revival sustain here?
Yeah, I think so. It should. So normally, last time when I was on your channel, I spoke about Jet. It has done well from. I see further upside for both the stocks. In fact, Indigo looks good for around 940 to 960 kind of a zone. So I think this pullback should materialize further. Even Jet Airways, which has been one of the big laggards and has been one of the big, worst performers, I would say, is still looking good for levels of about 260, 250, 260 kind of zone. So yeah, aviation looks good for further upside.
Between a Jet Airways and Interglobe, which would be the preference, Amit?
I would still play for Jet Airways. Probably this was what I mentioned last time as well. But I think Jet looks good to me, and probably in percentage term returns, I think it should offer more.
All right, Jet looks good, should offer more from here, 3.5% up on that counter. Meanwhile, the management of Shalimar Paints is also with us. Stock has recovered smartly from the lows of the day, but still down by about 2%. The loss has remained in and around that 10 crore mark. The EBITDA loss has in fact narrowed. Top line's grown by about 1%. Ashok Kumar Gupta, the vice chairman of the company, is with us. Mr. Gupta, talk to us about the quarter gone by. Still a loss, still EBITDA negative, but what's going on now? How's the outlook looking?
Thanks for the opportunity. I must say that we had a better quarter this one, and we have been able to grow our top line by around 40% from the previous quarter, even though it's only 1% from the last year same quarter. We have been also able to contain our losses. Our EBITDA loss has reduced from 12 crores to 6 crores in this quarter, and overall our operations are improving day by day. We are able to improve our top line as well as improve our margins. Despite the increase in our cost, we have been again able to improve our gross margins. Going forward, we are coming out with a right issue of around 217 crores. With that right issue, we hope to double our production and sales in the next 1 year. This will mean that our losses will be a thing of the past, and we should be in the green in the days to come.
Mr. Gupta, what exactly was the increase that you saw in raw material costs as a percentage of your revenues, or any other metric that you can share with us on that front?
There were two areas where the cost had gone up, the crude as well as the dollar impact. Overall, the increase in the input cost was around 3.5% to 4%. We have been able to pass on an increase of around 2.5 to 3% to the customers in October. So large part of the cost increase has already been taken care of.
All right. What's the outlook looking like going from here? What's the kind of growth rate that you will be targeting internally?
So we are looking for doubling our volumes in next 1 year. Hopefully, by financial year 20 end, we would be reaching about 60 crores per month, and hopefully by next 2 or 3 quarters, we should be in the positive cash profit territory. With these two things, the growth should be good as well as the profitability should improve.
You could break that up for us then, Mr. Gupta, in terms of your segments. Where can we expect to see the growth from going ahead, and which will prove to be most margin accretive, at least based on the trends that you're seeing currently?
There are two segments we operate primarily, which is deco paint as well as industrial paints. As you would be knowing, Shalimar Paints has a very good name in the industrial sector. So we are hoping to increase our share in the industrial market, where the growth will be much faster than the deco segment. So currently, our industrial segment accounts for only 33% of our total sales. This should increase to 40 to 45% in the next 12 months.
Right, but we've spoken to your two other competitors this week itself, Mr. Gupta, and the word we were getting from them is there is still some pressure in the industrial segment. What has your performance been in terms of both volume growth in industrials, and what's the kind of growth that you're targeting going forward from here?
In last 6 months itself, our volume in the industrial segment have increased by as much as 50 to 60% against our average growth of around 40%, which means that we have grown faster in the industrial segment. And one of the reasons is that we were already a big supplier to large number of companies. In the past, because of the fire at our Nashik plant, we were not able to supply in time. Having increased our production now, we have been able to regain these customers. That's why our growth in the industrial segment is much faster.
All right. Thanks very much, Mr. Gupta. Appreciate your time. That's Ashok Kumar Gupta, Vice Chairman at Shalimar Paints. Loss coming in at 10 crores for the quarter. That's versus a comparable figure of about 9.8 crores. Revenue from operations stands at about 71.7, nearly flat, a 1.2% uptick if you look at it on a year-on-year basis. But they have been able to pass on most of that raw material cost increase. So that is some good news coming in for the stock. In fact, Saurabh, let me ask you about the entire basket of paint stocks. Of course, Shalimar Paints is trading under pressure, but it's quite the opposite reaction that we're seeing for the likes of Berger Paints, Asian Paints at the moment. What do you make of the numbers that we've had so far, and what is the expectation you're working with going into the remaining quarters of the year?
I think after the results outcome of the Asian Paints, one thing is clear that the company was able to maintain the volume growth, but competitive intensity is still there in the industry because of the rise in oil prices. I think there is a good amount of pressure on the margins, and the company were not able to raise the product prices. But as the company has guided, I mean, from the October, the company is going to hike product prices. That means that since the festive season is coming, and usually there is a high demand largely from the consumer side. I think these companies would continue would able to make up some of the lost margin in the previous quarter, and moreover the slide in the crude price is also benefiting in the sense that if crude stays where it is or shows some more weakness, I think paint companies may gain some ground.
Okay, that's an Asian Paints for you, and of course being the market leader carries certain advantages with it as well. Let's take a very quick break. As we do that, pharma stocks falling like a pack of cards right now. That index is at the lows of the day. Frontline names such as Cipla taking a big knock, Sun Pharma, Dr. Reddy's, Aurobindo, all of them coming under pressure. Syngene posted a mixed set of numbers. As we take a break, let's hear out from the management of Syngene on the quarter gone by and the road ahead for them.
I mean, generally we're pleased with the performance in the quarter, and if you look at how we're progressing year to date for the half year, so revenue's up 24% for the second quarter, in line with our expectations, maybe a little bit clip or two ahead. We flagged up over the last year that there's a number of areas where we want to invest, where we think investing is important for the long-term performance of the company, and where we can create some differentiation. Some of those areas are things like safety and quality systems. We benefit from the SEZ tax structure on many of our operating units. Those things are time-bound, they have an expiry date, and we're starting to see one or two of our facilities now come out of that SEZ tax holiday with a slight upward pressure that I think you'll see in coming quarters. If we see opportunities, we'll invest, but in general, we've laid out what I think is a fairly clear program. As I said, there's a year or so more left to run on that. I'm pretty happy with the general level of investment in the business and with the capabilities we're building. So nothing I would call out of any significance at the moment.
Welcome back. You're watching the trading day. Saurabh, I wanted to get your view on Maruti numbers that came out a short while ago. They were disappointing in the sense that, compared to, of course, previous quarters, but much better than what was being in the stock. Of course, still trading under pressure, but well off the lows on the back of those numbers. Your first takeaway, and also, the kind of commentary that we got from the management in terms of these commodity prices, foreign exchange rates that will continue to weigh on them going ahead?
I think definitely the commodity prices and the discounts offered by the companies, more expenditure on the advertisement and sales promotion will continue to affect the margins, considering that many of the companies' products which were in waiting period are now being easily available on the dealer shops, and dealers are giving discounts on many of the products which were earlier enjoying some waiting period. Moreover, newer products from Hyundai like Santro entry-level car is making a lot of buzz in the markets and may provide some kind of competition to the Maruti. Also, the volume growth is a bit negative on the lower side. So I mean, this trend is likely to continue for another quarter or two. And being this quarter festive season, normally these companies enjoy a good amount of growth. Certainly. But at this point in time, at this juncture, it is not the case is not looking as usual. I mean, the business is not as usual. That is why we continues to see a good amount of pressure in these stocks.
Right. JSW Steel numbers are flashing on the bottom of our screen. Let's just pull them up. Top line revenue coming in at 21,550 crores. Bottom line coming in at 2280 crores. The stock is moving up at the highs of the day. A 0.5% up move coming in on JSW Steel. The profit number seems to definitely be a beat on estimates. The street was estimating a figure just above 2,000 crores. It's coming in at 2,280 crores. So a definite beat there on the bottom line front as far as JSW Steel goes. Margins and realization will of course be important to watch out for over here as well. Steel companies are also coming up with the price hikes following the surge in raw material costs. That's another factor to watch out for. Raw material cost also coming in has gone up as was expected, coming in at 11,070 crores versus 9,300 crores. So an uptick of about 20% on the raw material cost front as well for JSW Steel. But first cut, Saurabh, I'm trying to get a little more details on this. JSW Steel, how does the number look to you?
I think the number have positively surprised the street. I mean, because of the rise in the metal prices, there was expectation that the metal companies would continue to post good numbers, but we have to see how the trend in the metal prices pan out in the global environment. I mean, of late we have seen some kind of profit booking coming into the commodity prices, and that may put pressure on the metal companies on the domestic side.
In fact, Amit, comment on a JSW Steel on the charts. Of course, it's seeing a sharp spike at the moment, but it has been, the outperformer from the pack, given to the same amount of profit booking that the others have recently. But overall, slightly medium term, what's the outlook on this one?
Sure. Yeah. So I mean, broadly, steel continues to look good, and within steel space, JSW and even Tata Steel, they both look good. They weathered the fall quite decently, I would say. In the short term, around 340 area, it's trying to settle down and has tried to make a double bottom there. My sense is stock is headed towards 375, 380 zone. That is possible. So till 340 on the downside does not get violated, it's in for a recovery on the upside.
All right, that's JSW Steel for you. That stock is moving up now at the highs of the day at the moment. The margins have also come in slightly better than what the street was estimating. So operationally a good quarter for them, even as you've seen a big surge as far as raw material costs go. We'll get Piyush Jain. In fact, Piyush Jain is joining in to give us a lowdown of those numbers. First cut, Piyush, looks to be a good one, especially on the operational front.
Well, strong growth again, a beat on revenue estimates, a beat on net profit estimates, a beat on EBITDA estimates. So again, margin beat again across the board, very strong results. Why the results are strong? Primarily again, we know the pellet prices have moved up. In fact, the HRC prices have moved up. So again, it's also a story of utilization, higher volumes, again, good volume push. And then also about very favorable pricing again across the quarter. Now it's about HRC also for JSW Steel, but we are going to hear this story again from the other steel players also again, where because of pellet, because of pig iron, a lot of steel companies, from stainless steel companies also again, they actually are going to report some very strong numbers here. So from JSW again, the numbers are reflecting very robust volume growth and also very robust spreads again. A sort of return of strength, a slightly better spreads versus the last quarter, and that basically is playing well for the company.
All right, that's definitely playing well for the company. So a beat on all fronts for JSW Steel. Thanks for getting us that quick update on those numbers, Piyush. Earnings here coming in. In fact, markets are seeing some, or rather attempting to recover from the lows of the day, but you still have the Nifty, which is down about 0.9% globally. Dow futures is up about 200 points. European markets are also seeing some gains at the moment, but that cheer, or rather that bit of a bounce back after deep cuts overnight, is not reflecting on Indian trade at the moment. At least you're still down about 0.9% on the Nifty at the moment. Something like an Axis Bank sharply off the lows of the day. In fact, trying to move into positive territory in an Axis Bank right now. Amit, do you see a trade over here if the recovery plays out?
Yeah, see, broadly, if we speak, the banking space, while Nifty has made lower lows, Bank Nifty has still not made has not breached still the 24,250, the base that it made. It is still not been breached on the downside. So in a way, barring today's session and I think yesterday's, broadly Bank Nifty has been outperforming and was showing a lot of resilience on on the downside. So yes, I think as the market kinds of settles down and starts a phase of pullback, I think it will lead with banking names, financials, I think even NBFCs. So I think this will be the pack which will be roaring on the upside rather than some other defensive names, etc. So yeah, I mean Axis Bank, being an expiry day, such late movements may not be sometimes be a good indicator, but broadly speaking, yes, banking does look good, and overall once the pullback materializes, banking and NBFCs are expected to do very well going ahead.
All right, banking and NBFC expected to do well going ahead. Hold on to your thoughts, Amit and Saurabh. Just about a minute to go for closing then. Expiry day, the trade has been very, very choppy. The breadth of the market has improved, you would have to say that, but otherwise on the benchmarks and on the broader market front, you are still very, very depressed. So closing lower by about 80 odd points on the Nifty, about a 200-point cut coming in on the Bank Nifty as well. Let's start with the gainers first up. It was a Wipro that led the way, 2.5% uptick coming in on the back of good numbers from this one. Coal India once again on the move, 2.5% up over there as well. HCL Tech had a good day of trade along with some of the OMCs. Bajaj Finance, second straight day, good gains coming in. Of course, it was a big surge yesterday, some follow-on buying in today's trading session as well. Asian Paints too was looking good. ONGC, JSW Steel, good numbers over there. ITC, Hero Moto and Bajaj Auto closed out in positive territory. On the flip side then, Indiabulls Housing Finance losing big, nearly 7% cut coming in there. Similarly for a Bharti Airtel. You had weakness for Tata Motors. Once again, Yes Bank numbers should be out now, down about 2.5%. Eicher Motors was also weak, so was an SBI, a Reddy's and NTPC and ONGC. Maruti Suzuki also reacting negatively to its numbers. Axis Bank closing out negative but did see a revival towards the end of trade. It's been a series to forget as far as the market goes, down about 850 points for this series, which is a similar kind of cut that you saw in the previous series as well. We are down about 1600 points from the peak on the Nifty at the moment. Let's see what the outlook is. Broader markets though, Nivrita, again sectorally you had most sectors that have closed out in negative territory, but the breadth did show some signs of improvement towards close of trade.
Absolutely, breadth looking much better, and we've pared back the losses quite significantly from what was going on earlier in the day. Some of the top gainers, in fact, we saw some last hour surges come into the likes of an Intellect Design Arena. So SJVN actually closed out one of the top gainers. It's a 13% jump coming in on that one. Interglobe Aviation along with Jet Airways, both those airlines are closing out with strong gains by the time we ended the day. Kajaria Ceramics on the back of second quarter numbers reacting very positively, 7.5% uptick on that count, and it's a similar story for a PSU Bank. In fact, Oriental Bank of Commerce 6.5% up on the back of a profitable number coming in versus a loss in the same quarter last year. Heidelberg Cement, HCL Infosystems, Bata India seeing a strong move, 5% up by the time we closed out. HCL Tech, of course, most of these IT counters managed to hold out by the time we closed out. Team Lease, Kolte Patil, Divi's Labs, some of the other counters that saw strong traction in today's trading session. But on the flip side, very, very weak quarter coming in for Dish TV, and on the back of that, it's closing out one of the top losers from the broader end of the markets, 18% cuts by the time we ended the session. Infibeam Avenues once again closing out with cuts of about 18%. Jubilant Foodworks, an earnings reaction on this one too, 10% cuts by the time we closed out. BHEL similarly reacting very negatively to its second quarter results. Indiabulls Housing Finance giving up with the gains that we saw in the last couple of sessions, 7% cuts by the time we closed out, and a Shriram City Union from the mid-cap space, one of the top losers from the financial space. That said, we did see a fair amount of traction for select financials. Grow Finance did quite well today. We also, of course, had select names, M&M Financial Holdings, on the back of strong numbers, and the entire basket of paint stocks. So Kansai Nerolac, Berger Paints, along with, like you mentioned, an Asian Paints, closing out the day in a positive territory. But Saurabh, let's leave us with a strategy really as far as the month to come, because things are looking very, very different from what we'd anticipated maybe a couple of months ago. When the weakness initially started, there was a sense that it was temporary, and we'd in fact pull back and end, and approach Diwali on a very strong note, 11,000, 12,000 maybe on the Nifty. It's clear at this point that that is not the case. What then should be the strategy that investors should employ at this point?
I think if you look at the nervousness, it is a global event. I think globally there is a sense of nervousness because of the low liquidity and the hike in the interest rate by the US and many of the banks. It is a factor of also how the crude prices behaved lately of late. And as far as domestic markets are concerned, I think the liquidity and the higher crude prices and depreciation in the rupee was a spoil sport, and initially it was looking that it was very temporary in nature, but since we are seeing the trend continues in the last few quarters, in the last few weeks, I think that is more it is more of a structural kind of nature, and that is why we are seeing continuous amount of selling in the market. I think we have to be very stock specific. I think the domestic stories, the domestic companies which have posted good set of numbers and likely to post better numbers are the ones we have to keep an eye on. So it is largely, I think the sector specific approach may not work. I think it is only largely 2-3 sectors which have behaved overall comfortably in this market mayhem, like IT, pharmaceutical, and if you see BSE 500, I think the index itself has lost around 16%. So you can have a sense how mid cap, small cap, and automobile, real estate sectors have performed. So we have to be very stock specific, and there is no point in jumping into the market only seeing that the stock has corrected very much, and maybe it is a time to to buy this stock and it may give good returns. It will not be the case going forward.
May not be the case going forward. Thanks so much for joining in, Saurabh. Amit, final word to you, then give us a range that you will be now watching out for. Two disastrous series back to back, like I said, about a 1650 point cut coming in. What's the setup looking like for November?
Sure. So, I mean, we are towards the important levels, I would say. I would consider, rather than an absolute level, I would consider it as a zone. 9950, 10,000, even as of now, while we trade, we are seeing some signs of market trying to find its feet and find its ground, even on bad days, where US is closing sharply down, we have relatively done better. A lot of stocks, even within NBFC space, are showing signs that the selling is ebbing even on the index level as well. So my sense is we are closer to a bottom. November series I am quite positive on. My sense is we are getting towards 10,700, 10,800 kind of a rally on the upside. So a lot of stocks which are quite oversold, good names, would show decent bounce back going ahead.
All right, some of the beaten down stocks should be bouncing back, at least that's the expectation going ahead. Thanks very much, Amit. Appreciate your time. We will, of course, get in touch, continue to track how things play out for the market in the next series. But let's put the focus then on some earnings.